Buongiorno, buon
Hello.
pomeriggio, better said. How are you doing? Nice to see you. Good afternoon, all viewers who are joining. Also, YouTube viewers, community viewers, everybody who is watching us. Big hello to everybody, guys. Big hello to Stanislav Kolev, straight from the Black Sea resorts of Burgas. If you didn't visit that, that would be nice to visit one day, but probably now it's off
Now
season,
I
right?
think that you gotta go to
Yes.
there are better locations that you could see than here, so don't bother.
Jack
Hey
saying,
man, good to see you.
Jack is here. Welcome, Jack. Yeah, let's talk about markets in the view of the CPI report. Highly expected, came lower than expected, softer than expected. Initial
As
reaction
expected.
as
As
expected.
expected,
I think it was a
softer
little bit
than it.
softer, uh, depending where you're looking for the service, because we know that those expectations are based on some kind of a average of expectations.
It's a
And
survey, yeah.
here I see here was 3.1, for instance, in this calendar, right? Maybe you're looking different calendar. So it depends on the sample of analysts or economists that they're looking into, that they might be have a little bit different. But from this calendar, I see that 3.1 was the expectation. Core inflation was also 3.1. It came a little bit softer, right? And also
Yeah.
monthly came a little bit softer, 0.2, 0.3, 0.3, 0.4. So 0.1 percentage point softer, which uh, which is enough, right? Which is enough, and you see that it's enough to lift gold up. But look, gold was
But that's a
falling.
temporary move.
Yeah, gold was falling, right? Gold was falling $100 from yesterday prices. So it's just coming up a bit. And look, yesterday,
That's ready to sell any
right?
moment now.
I think give it a little bit time for 4,115 maybe. It was down $104. Now it's recovering just 45. Well, actually, 45 is not a small number. Uh, and I see 4106 as important level, so another $15 up. And Friday CPI, they actually can go in one direction. I'm thinking, so maybe there will be a sell when they reach a really extreme level today. Let's say going back into 4130, maybe trying at 4106. Actually, I go with that momentum. Usually, when you have also in euro which was limping there, it got some momentum going. And I remember those days on NFP and CPI, the euro might be going down for a week, and then on CPI or NFP, it's going up for a whole day and recovering the weekly losses. So maybe in that setup right now. But look, 1640, this is the resistance, 1650. Uh, Market just get up there. Maybe there'll be opportunity to sell for those who are stuck with the euro. I'm trying to go with momentum. I'll go with the direction. This is kind of a bullish structure short term. I don't know how far they will go, but let's go with the flow at the moment. Maybe they reversed. Maybe they continue higher and then reversed. So I go with the flow. I don't think we are talking about the suckers rally, like you go up and immediately you go down, because gold was down and now it got room to recover, right? So gold was down $100 and just recovering. It could be actually coming back in where it started trading today, the European session. So we got this drop, European session. Now US session is pretty bullish right now for gold. But then eventually, probably at those levels next week, for 140, or even today, if they come there, there will be a possibility of maybe sell. So right now we have a bullish action in gold, CPI lower than expected. Probably you're smelling the trap here, right, Stan? Looking in your eyes.
I'm absolutely for a sell. I like to sell silver better. And if I sell gold, I'm going to sell it, now listen properly, against the Japanese yen. It
Ah,
is XAU JPY. We just got the
yes.
alert for gold, folks. Now, alert for gold trigger. It's in the good zone, first zone for a sell. Let's wait for a price action to see. And if it gets higher, make an uptrust. I will like it even better. But that's a downside to me.
Yeah, that's interesting instrument. That's gold in Japanese yen, right? Because if you do go gold USD, and at the same time you
And
wanna,
you know where I'm coming from this, because that why did I pick this? It's something that you also use.
hmm?
It is the yen to 10-year treasury yield.
Yes,
and it's been running in significant discrepancy. It's a matter of time for it to start equalizing. Next week we had Fed. Next week we have Bank of Japan. Now maybe you bring the other one. No, not so much. Not so much. You
Yes.
gotta do daily.
Just want to show
Daily is
our
cool.
viewers what we are looking here. There was a
Ah, okay.
consolidation. I was expecting that they might be breaking the 4 level when they were like 405. They did. They did. And actually, that should be helping yen. This was a very valid correlation with yen if you look at the bigger picture. Recently, that changed a bit. But let's check this correlation with US dollar Japanese yen. And those bond yields are really falling right now. And look, now we have divergence, right? See divergence, right? But for 5 years, this correlation was very valid. But recently, something changed. We have
But
this.
there were times that one was ahead of the other and vice versa. So this is exactly what we're looking for. There were times, like for example, this year, you gotta zoom it in. Okay, this is more good. You see bond yields in the beginning of the year, you had the opposite. Yields up, yen was down. So they were at the moment they crossed, and dollar yen ninja is up, but the yields are down. So if you make a cross right now, if you continue the lines that you started,
Mhm.
continue the lines. Okay, this is the dollar yen, and this is yes, exactly what I'm talking about. Yeah,
Yeah, but this was a positive correlation. And now, so you expect that probably they're going to catch up, right?
I mean not really positive because you see blue from the bottom have been climbing up. Yes,
Yes.
slowly, but from the top the yields was going down. This is the yields, and that's the dollar Japanese. So yields increase very fast, but dollar Japanese in slowly. So more or less we have a cross there.
Yeah, so you're looking at this.
Yeah, exactly.
No, what I see is that actually there's the big divergence. 10-year bonds, they're going down, and yen is actually losing. But you know that there was lots of political drama right there.
Yeah, sure.
So this spike here is politically driven. It's not coming from the bond yields correlation. So this was the news that brought the 149 to 153. This was just after the weekend, what, 2 weeks ago, 1 week ago, on the Taishi, what's her name? Sakaishi, no, Tanaishi, or the prime minister.
Takaichi.
She became prime minister, and before she became the
Takaichi.
Takaichi,
No?
she became the leader
Takaichi.
of the ruling party, and that was a big news because the U.S. dollar Japanese yen opened higher from just below 59, right? Let's just check U.S. dollar Japanese yen on 4 hour, let's say 4 hour, and you see, right? That wouldn't have happened if we didn't have the political decision there. So she became the leader of the ruling party, and everybody knows that she's into free, or let's say dovish monetary policies. She's not from the central bank though, but she's into fiscal stimulus. So, but the main idea was that look, in the short term, yen might be losing, but in the long term, it's not bad that she is actually into the fiscal stimulus. Because in the long term, and the immediate reaction on bond yields in Japan after yen was actually losing was that long-term bond yields went up and short-term yields went down. So actually, it was showing you, okay, the long term is not actually bad for the yen, but in the short term, it was like, okay, lower rates. Yeah, Jack says Sakaichi or Sanaichi might hurt. Yeah. Okay, cannot remember all those Bank of Japan, Takata. There's one guy, cannot remember all names. Uh,
Takenachi, there are too many.
yeah,
Yeah.
Takata. Yeah, there was one of the guys there. Ueda,
Whether is easy.
Abe, Abe before Abenomics.
Yeah.
So she's into that Abenomics stuff, right? Uh, okay, so that
You
explains
could just call it Toshiba and that's okay.
uh,
Haha,
Sashiba,
Friday
maybe.
jokes.
Sashiba. So we got this explained, right? And now, if we talk about that, the real, okay, let me show you the bond yields in Japan. So you got it from here. Initial reaction on bond yields in Japan.
But
Okay, let's
we
focus.
don't.
Yeah.
It doesn't do much with the dollar yen. The Japan yields.
But it's showing the reaction uh, after the
But what? How are we gonna use that?
no, just to illustrate like how the market reacts, right? That not
But
necessarily
we okay.
to confirm that actually it might be not bad for yen in the long term. So look, initial reaction
Okay.
on bond yields, the longer term bond yields was that actually they were going up here. See, right? So what does it mean? It means that they expect maybe some pickup in growth, higher inflation. That means my higher rates in the future, in the long term, right? And still, Bank of Japan might be raising rates. But that political decisions, they influence the short-term volatility, and actually US dollar Japanese yen was up and it's holding there, right? So now what to do with that? I definitely wouldn't go long here. I would definitely, especially now when you have this decision, the reaction on CPI and now pulling back, maybe there'll be a good short today. Let's see if euro is continuing. It's flat after, it's flat. It's flat now, right? Initial impulse consolidation right now. And gold, I see gold is pushing, right? So it's breaking the 4106. But you said something about XAU Japanese. So let's talk about this. So what's the decision?
Yeah, in the
What's the
case
idea?
that gold continue going down, we got uh, because why gold was going up. One of the reasons, to me, a very strong reason gold was going up is because we had stagflationary environment. We had in the last five readings inflation printing upward numbers, so going up, and we have seen job readjustments. We have seen bad non-farm payroll reports. This is stagflationary data. What we do in stagflationary data, we buy gold. And we bought it so much, I was part of the run, that it gets so elevated that everybody want to buy. So when everybody want to buy, start selling. You remember, I still, we spoke about this last week. I still maintain my positions from last week for gold sell that we traded together and with silver and all of those. I could see that coming further down. So long story short, um, if we assume that today's data also confirm that stagflationary environment is over, and we got the what is called um, inflation going down, labor markets going down as per the latest news, but inflation also going down. This is okay. You don't have to be into safe haven assets, which at the moment safe haven definitely is gold. So if we assume gold's going down, but also silver goes down, I think that we have some very good opportunity with that. And we have gold, the options that we have is gold euro, gold silver, and
And also gold's,
gold euro,
look,
gold yen, and gold
CNH.
Chinese yuan.
Yes.
Chinese yuan, which I'm not gonna
That's
touch
something new,
for
right?
sure.
Because before we got only gold euro. Now we have gold
Yes,
Japanese yen, gold
yes, and
Chinese
also
yuan.
I show you something else last week. Gold for troy ounce, Gao. Remember? Or
Uh, which one?
G. Oh, was showing it to somebody else.
Yeah, not to me.
GAU, Gao. Gold per gram, not per troy ounce, which makes it way cheaper to trade.
Uh, GO.
GAU,
GAU.
like AU is the
GAO. Okay.
periodic table symbol,
GAO
yes?
USD. Okay.
Yes,
Gram.
exactly.
So price per gram, right?
Exactly.
33 grams is 1 ounce.
Yes, that's why this is three times
So
cheaper because the minimum lot size you could do
yeah.
it is 10 grams. So it is 3 and it's 1.1 cheaper.
Yeah. So let's see if I calculate here. Probably, yeah, 33 times 132.37 equals 4368. So probably troy ounce is a little bit less. It's maybe 31 grams. Yeah, troy ounce is 31 grams.
Yeah,
Let
it's
me check.
okay, whatever. About 30,
No,
it's
just if
31
we
point something.
let's finish because if you trade that, like, nice to know what's actually.
It's three times cheaper, roughly.